Hello and welcome. Today, we're going to break down a financial tool you may have heard about, the Prosperity PathPro Max Annuity. We're going to peel back the layers on what it is, who the company's behind it, and how it actually works. The goal here is to help you see if this kind of tool is the right piece for your long-term financial puzzle. So, let's dive in.
You know, Prosperity Life Group's motto is, "Let life flourish." And I think that's a pretty great place to start, because it really gets to the heart of what an annuity is supposed to do, right? It's about creating a stable financial foundation so you have security and can hopefully see some growth down the road.
So, here's our roadmap for today. First, we'll get to know the company, Prosperity Life Group. Then we'll jump right into the PathPro Max annuity itself. After that, we'll explore how your money has the potential to grow, what your options are for accessing it, and finally, we'll cover some really important rules and considerations you need to be aware of.
Okay, first things first. Before you even think about a financial product, you've got to know who's standing behind it, right? So let's pull back the curtain and meet Prosperity Life Group.
Well, the first thing that just jumps out at you is their size. As of late 2024, the company was holding $29 billion in consolidated assets. Now, for an insurance company, a number like this isn't just for show. It really speaks to the financial muscle they have to back up the long-term promises they make to their contract holders.
So they're big, but what do the experts say? Well, this is where it gets interesting. 3 of the major rating agencies, we're talking AM Best, S&P Global, and Kroll, have all given Prosperity's member companies an A- rating with a stable outlook. Think of these ratings like a report card for an insurance company's financial health and its ability to pay its claims. And an A- is a very strong grade. Now, this isn't some brand new company that just popped up. Its member companies actually have roots stretching back more than a century. But this timeline shows they've been in a serious growth mode since their founding in 2009, making some big strategic moves along the way, including a massive acquisition in 2024. This shows a company that's actively expanding.
All right, so we've got a handle on the company. Now let's zoom in on the actual product they're offering, the Prosperity PathPro Max. What exactly is this thing?
The PathPro Max is what's called a fixed indexed annuity, or FIA for short. So what on earth does that mean? Put simply, it's an insurance contract that's built for retirement savings. The big idea here is that it gives your money the potential to grow based on how a market index, like the S&P 500, performs. But, and this is the key part, your own money, your principal, is protected from market losses. You get some of the upside potential without that direct downside risk. So here are the key features at a glance. You fund it with a single, one-time premium. You get to choose your term, 5, 7, or 10 years. It also comes with an upfront premium bonus, which we'll talk more about in just a second. The minimum to get started is $20,000, and it's available for a pretty wide age range, from newborn all the way up to age 85.
Okay, let's pop the hood and see how this thing is actually designed to grow your money. It really comes down to 2 key pieces, that premium bonus we mentioned and the choices you make for allocation.
First up, that premium bonus. The best way to think about this is like getting a head start. Right out of the gate, the insurance company adds an interest credit to your contract value. So you start with a little extra, and that bonus gets put to work right alongside your own premium from day one. And this brings us to the element of choice, which is so important. Your money isn't just stuck in one place. You get to decide how to allocate it across several different index options. You've got well-known ones like the S&P 500 and some others that are designed to help manage volatility. Plus, there's also a simple fixed interest rate option that guarantees you'll never earn less than 1%. This is how you can tailor the annuity strategy to fit your own comfort level.
Growth potential is great, but let's talk about something just as important. What if you need to get to your money? This next part is all about liquidity and some really crucial safety nets that are built right into the contract for those unexpected life events.
Here's a really key feature for flexibility. While annuities are definitely long-term vehicles, this one isn't a sealed vault. Starting in your second year with the contract, you can actually pull out up to 10% of your account's value each year, and you won't have to pay any withdrawal charges on that amount. And beyond that 10% annual withdrawal, there are some pretty powerful safety nets built in. For instance, if you're confined to a nursing home, the confinement waiver could let you access up to 100% of your money without charges. The same goes for the terminal illness waiver if you're ever faced with a terminal diagnosis. And if you have a qualified retirement account, it's RMD friendly, meaning the government-required distributions you have to take won't trigger any charges either. Now, for a full, honest picture, we have to talk about the rules of the road.
no financial product is without its conditions, right? So this last section is all about understanding the charges that can apply, specifically if you need to take out more than that penalty-free amount we just discussed.
So, like we said, you have those penalty-free options. But if you take out more than that allowed 10% during your initial 5, 7, or 10-year term, then withdrawal charges are going to apply to that extra amount. Let's see exactly what that looks like.
Take a look at this table. It lays it all out pretty clearly. As you can see, the charge percentage starts out at its highest point in the first couple of years, and then it steps down year by year over the life of the contract. So on a 7-year contract, for example, it starts at 9.25% and then drops all the way to 0 in year 8. The whole structure is really designed to encourage you to keep the money in for the full term you chose.
Now, there's another rule that's separate from the withdrawal charge, and this one is tied directly to that upfront bonus we talked about. If you make one of those excess withdrawals, the company can actually take back a portion of that initial bonus they gave you. They call it a recapture. And as you can see from this table, just like the withdrawal charges, the percentage they can recapture also goes down every single year until it eventually hits 0 when your term is over.
And that really covers the core mechanics of the PathPro Max annuity. We've looked at the company behind it, the product's main features, and the rules of the road. And ultimately, exploring a product like this brings us back to a really fundamental question we all have to ask ourselves. Does my own financial plan have the right balance between the desire for growth and the absolute need for protection? Understanding where you stand on that balance is really the key. Thanks so much for joining me today.